UBS discovered a fraud. It could cost it $2 billion. We're going to join Louise Cooper. She's a markets analyst for BGC Partners in London. Louise, thanks for joining us. We saw the European markets actually opening up, but that announcement bound to affect things, isn't it?
Yeah, I mean, the European markets had been expected to be up about 1.5%. And the UBS announcement did take the shine off the open. Currently, most European markets are about up 0.5% to 1%. So it definitely did affect the markets, really quite startling, because we had thought that over the last 3 to 4 years, control of risk at banks had been increased substantially, and such rogue trades were things of the past. You know, when I speak to the brokers here at BGC, or I speak to friends who work in the financial city, they tell me there's much more risk control, much more credit control at banks. So quite what went wrong at UBS for this $2 billion rogue trade to be discovered, or even to be allowed to get so big, is not great for UBS. Really, this should have been dealt with. This should have been found out a lot earlier.
Louise, we should talk a little bit as well, of course, about that ongoing Eurozone crisis. It's 3 years exactly, of course, since Lehman Brothers filed for bankruptcy. And we're hearing the term credit crunch once again. In fact, the EU, an elite document prepared for those Euro finance ministers meeting in Poland on Friday, is talking about a systemic risk and the idea that it's not just a sovereign debt crisis anymore, but the banks are being dragged into all of this.
I mean, we've known for many months that because of concerns about the viability of some banks, they were finding it difficult to borrow money short term. You know, banks have to fund their enormous balance sheets, their enormous loan books, and they tend to do that via lending. And, you know, we've seen reports in the newspapers that big money market funds, for example, were reluctant to lend money short term to French banks. And so there is a lot of concern. And the one thing is that the ECB is providing an awful lot of liquidity, an awful lot of funding to these markets. So, but they're the kind of only, for some banks, they are really the only game in town. So it is true, wholesale money markets are anything but normal at the moment.
And Louise, briefly, if you can, SocGen, BNP Paribas, both admitting they're struggling to get dollar funding. Are you seeing that right across the border, or just a problem for those two banks?
The problem we have is the lack of visibility. These banks have such enormous balance sheets, you know, the sizes of small countries, such enormous loan books that nobody really knows where the losses are. And without full transparency, almost all of them get tarred with the same brush. So there is fears about the French banks. Just look at their share prices will tell you that. You know, BNP and SocGen, literally in 3 or 4 trading days, the difference between the peak share price and the trough share price is 30%. Now, that tells you there is massive fear out there about their viability. Now, we know that wholesale markets are difficult. We know that funding is difficult for banks. And at the moment, without full transparency from all the banks, everybody is fearful.